Hey traders, Jason here from Leavitt Brothers. The market has been all over the place the last 2 months. From its mid-October high, the S&P dropped about 200 points. Then it rallied all the way back. Then it fell almost another 200, but recouped most of those. Now it's in the midst of another big move down. Today I want to back up and investigate how the advanced decline line acts and moves at market bottoms and compare it to today to see if there are any hints of strength brewing. Okay, the trend is down. All the indexes are trading below their 50 and 200-day moving averages, but I want to see if there are any glimmers of hope or if the market is far from bottoming. Okay, so I'm going to go back in time to right after the 2009 low. I'm going to investigate each of the corrections we've had, see how the advanced decline line acted, and then we'll see how it compares to today. Okay, so first chart is 2010. You'll note the market topped. Okay, in May of that year, moved down, moved up, got rejected by its 50, and then moved down again. During that time, the AD line moved down, but it didn't move down that much. Okay, it wasn't a huge drop. It just kind of dropped. Okay, then when the market moved up and got rejected by its 50, the AD line did the exact same thing. Then a little divergence forms. When the market dropped all the way to a new low here, the AD line simply came down and basically matched its low. It made a lower low, but it was pretty close. That kind of told us that there's still some strength in the market. The fact that the market sold off so hard and easily took out the previous low, yet the advanced decline line pretty much held its low, told you that there was some strength. Then the market rallied back, and basically all it did is match its previous high, but the advanced decline line went all the way to a new high. So that told us that the strength that was brewing over here in late June, early July really showed itself during July and early August when the market matched its high, but the advanced decline line easily made a new high. Then the market kind of came down hard again. Okay, it probably lost about 60 to 70% of its previous gain. And the AD line, all it did is come down really softly, really gently back to its 50 and bottomed. Then it was off to the races. Okay, so you could see how, if I were to summarize this, we had a divergence that formed here when the market easily made a new low, but the advanced decline line pretty much held its low. Then when the market matched its previous high, the AD line went way to a new high, and then during this period where it dropped a bunch, this thing just fell a little bit. So we were given hints right here, and then right here that there was strength was there. Okay, just because the market was all over the place, just because the market was suffering some big drops, the AD line told us that there was some strength, and sure enough, boom, off to the races. Okay, let's look at the next one. Here is 2010. We got a big topping pattern here. Market then falls hard. Okay, it fell hard, but the AD line, it fell kind of hard, but not too hard. Okay, this up here looks a lot worse than this drop here. Then, while the market essentially traded in a range sideways, the AD line did the same thing. Okay, if the market was weak, the AD line probably would have done something like this. Okay, but it didn't. It actually held up. It just traded sideways in a range. It told us that, hey, things have gotten a little bit worse, but they're not that bad. We have a positive divergence here where the market spiked to a new low, but the AD line held up. Okay, and then we get just continued hints that the market still had some strength. The market rallied strong here, came back down and took out its 50, came back up, got rejected by its 200 again, down again, and then up. And during this time, the AD line pretty much matched its high from back here. You can see its high here, it matched there, okay, as opposed to this. So that's a good sign. It means there was enough buying here to completely negate all the selling that took place here. Okay, and then you can see that on these tests here, we got a test of the 50, another test of the 50, and then it was off to the races. So we were told several times, just like the last chart, we were told several times that the market still had some strength. Okay, the AD line was flat here instead of moving down. It held its low instead of the low here. Tested the 50 here and here. If the market really was weak, if there was some internal weakness, you would have seen this thing move down like this, or over here, there would have been a bigger penetration of the 50, and then maybe it would have struggled. But we were told several times over the course of a couple months that there was strength there and the market wasn't that bad off. And then, of course, you see what happened. It was off to the races. Okay, next chart, 2015. Okay, so the first thing you'll note here, and it's very obvious, we talked about this at Leavitt Brothers, for a couple months as it was playing out, is that while the market was flat during the summer, the 80 line had already broken down below its 50 and was already trending down. So this big drop here did not come as a surprise to us at all. We were ready for it. What you have here is we have a double bottom, boom, boom, and then a big rally up. Whoops, that's too big, that's all right. Comes down and tests its 50, and then it tries to rally up again. The 80 line does pretty much the same thing. We get a double bottom here, we get a big rally up, and then this comes down and tests its 50. Okay, on the next move up, this matches its high pretty close, this matches its high pretty close, but then the 80 line comes down, takes out its 50, and drops even further. So instead of just drifting sideways and allowing the market to consolidate, it actually gave us a hint here that their sellers are present, okay? So as the market pretty much moved sideways here, we got a big move down from the 80 line, we got to move up, it got rejected. After a few days, it got rejected by its 50, and then it started coming back down here. Okay, so there was ample warning here that despite the double bottom here and the fact that the 80 line moved up, came down and tested the 50, moved up again. The fact that it moved down so much here, got rejected by its 50 and started moving down again, told us that this range up here was probably not going to resolve up, but was going to probably resolve down, and that's exactly what happened. Okay, so the advanced decline line told us, it warned us, path of least resistance is probably not up because decliners were beating advancers. Okay, we were warned that this bottom here probably wasn't going to be the bottom. Okay, next chart is just going to fast forward to 2016. Okay, that period that I just talked about is right here. Okay, and that big stiff drop. All right, so what we have here is we have another drop. Okay, kind of like what happened over here, we have another one. So it goes down, it goes up, it goes down, it goes up. So let's investigate how this is different than the last one. So over here, we get a move down in the 80 line just like we did before. We get a very similar W pattern, but here's where things kind of get different. Over here, on the second bounce, we got a bounce, and then it moved sideways, and it eventually lost its 50. Over here, it was just off to the races. I mean, it was so, advancers were beating decliners by so much, it didn't even come down and test the 50 at all, or move sideways and test the 50 again and then break out. It just kept going and going and going and going and going. So that told us, the advanced decline line told us we could trust this move. That was it. The market was going to go up. Okay. Over here, because this flattened out, because it took out its 50, because it made a lower low right here, we were being told, don't trust the move. Nice double bottom, feels good. We're back up to this range here, but the advanced decline line told us, don't get too excited. It's probably not going to last. Whereas over here, the advanced decline line told us, that's it. The bottom's in. You can get long. It's safe. Okay. So again, the advanced decline line it tells us whether to trust a move. It tells us whether to not trust a move. Next chart, 2018. So this is earlier this year, which is fresh in everyone's mind. We have a huge move down, but a pretty small move down here. Certainly, given this selling, you'd expect a bigger move down here. Market comes up, does a little dance around its 50. The advanced decline line moves up above its 50. So instead of, if the market was really weak, maybe it would have done something like this, and the 50 would have kind of gone like that. Okay, but instead it got above its 50, came back down and tested, went below it, and came up again to make a new high. Okay, which is kind of important because if you look at this, the market moves down a whole bunch here, but this barely moved down. Okay, the market moved a bunch here, moved down, then it moved down a bunch here, and it didn't move down that much. And then on this one, it moves up, and look, it takes out its previous high. Okay, so the advanced decline line right here is higher than here, even though the price chart is here versus here. So we're told, the advanced decline line told us that there are buyers lurking. Advancers are beating decliners. Okay, even though over the course of a couple months from here to here, advancers and decliners were about equal. So we were told the market's not that bad off. And then the market comes down, we get a little double bottom here at the 50, and then it was off to the races, and that's the same thing what happened here. So again, the advanced decline line told us the move down wasn't that bad. This move down wasn't that bad. The move up came with enough force to bring the advanced decline line all the way back to a previous high. We were told the move down wasn't so bad, the move up is pretty good, and most likely that this range was going to resolve up, and that's exactly what happened. All right, now let's fast forward to today. What's going on now? All right, so what we'll notice here is that market dropped a bunch, AD line dropped a bunch. Instead of the AD line, let's go back up here. So we get a bounce here. The AD line bounces, but not that much. Okay, we get a bounce here, but the AD line, again, didn't bounce that much. In fact, it's been trending down now for a couple months below its declining 50-day moving average. Okay, so if the market was strong, maybe the first bounce here gets rejected, but then the second bounce would get above it, and then on the next bounce, maybe we'd come down here, and maybe the 50 would like flatten out and start to move up, and maybe we get, maybe it comes down here and catches it and moves up. So that's what would have happened if the market was strong, but that's not what happened. The market got rejected twice, and now it's at a new low, and it's trending down. So we're told, compared to these previous charts I've showed you, that this actually is a lot worse than previously. Okay, again, comparing to early 2018, where we got above and made it higher high, here, these successive bounces, obvious lower high, obvious lower high, now we got a lower low. As of right now, we got to just assume the trend is down, and that's not going to change anytime soon. It's not going to be until, if we get a rally here, if we get an end of year rally, unless the advanced decline line could do something like this and then come down and test the 50, because the 50 would probably curl like this. Unless it can come down and test it and then come up like that, market's probably going to go south. Okay, maybe we get a bounce. Maybe we get a bounce here, and this comes up and then takes out the 50 again. The 50 will be like this, and maybe it gets rejected and then goes down again like that. Okay, I don't know what the scenario is going to be. We got to play them out ahead of time. We can kind of anticipate some scenarios, but bottom line is, given this trend, given the inability of the advanced decline line to put in higher highs and higher lows, given its inability to move above its 50, the market's weak, and it's probably going to stay weak. Okay, so we can get a bounce here, no problem, but unless the AD line does something like this and comes down and tests, path of least resistance is down, and that's that. Okay, you got to be careful, because in today's world, one tweet could make the S&P go up 100 points in a couple of days, but overall the market's not in great shape right now. All right, thanks for listening. If you liked the video and want me to do more, give it a like, share it with your trading friends. You can also subscribe to the channel right here at YouTube. Come check us out at Leavitt Brothers, where we provide market analysis and trading ideas to individual and institutional investors and traders. Again, thanks for listening, and I'll see you next time.